The U.S. government shutdown has entered its second day with no clear end in sight. Is there potential for the disruption to have an impact on the economy and interest rates? Joining us now to discuss is Gennady Goldberg, head of U.S. rate strategy with TD Securities. And Gennady, welcome to the show. Thanks for joining us.
Thanks for having me.
All right, so how damaging could this shutdown be on the U.S. economy?
Well, historically, markets have largely tended to ignore these, mostly because the impact on the economy has been relatively mild. Now, historically, shutdowns have also been relatively short. The longest one was actually about 34 days in President Trump's first term. And that obviously took some time to get through. But even the impact of that was relatively modest. I mean, we're thinking about maybe 0.2 percentage points off of GDP for the quarter. That's kind of the levels that we're talking about. So really the underlying fundamentals still matter a lot more for markets, but really this creates, an extra layer of risk for markets and for economists.
All right, now one of the big focus of the markets have been interest rates and potential cuts by the Federal Reserve. What impact will that have on interest rates and Fed policy going forward?
Yeah, I mean, this is the trickiest part. Because we have the shutdown, a lot of the government data is not being released. So, for example, Friday's payroll report will not come out. We didn't get jobless claims this morning. So we really kind of are flying a little bit half blind. Now, we do have private sector data. So, for example, we got the ADP report. We did get some of the regional Fed surveys as well. But it really is only half the picture. So the way I would put it is the fog is just getting thicker. We still expect the Fed to cut rates in October and December and 3 more times next year. But it really makes their decisions fairly tricky, even though the October rate cut is actually largely priced into markets for now.
And of course, we talked about equity markets have shrugged off much of that news in Wednesday's session. Do you expect investors to continue to be somewhat upbeat about the situation going forward?
I don't know if it's upbeat. It's more so kind of a cautious optimism, I would say. Most investors are looking at this and saying, look, we're not really seeing the impact on the economy. If we do see it, it'll be relatively modest. Rates investors at the same time are also kind of chopping around in a very narrow range. You're not really seeing much of an impact. The big question for us is really what's the lasting impact here? The one caveat here is this shutdown could be a little bit different. The second Trump term has been different from just about any other presidency in living memory. Trump has threatened to, instead of furloughing employees, so basically laying them off temporarily, to permanently fire federal workers. And that could actually have some market implications over the long run if it starts to push up things like the unemployment rate, for example. What we don't know is the extent of those plans, how much of that is a negotiating tool. And really, Anthony, the big question is just how long this lasts. The longer this lasts, the bigger the impact.
Yeah, that's right. And you talked about jobs and the impact on the labor market, and the Fed seems to have pivoted towards the weakness of the labor market. Of course, because of the strike or because of what's happening in the U.S., there's no jobs report on Friday. What data is going to be available that you'll be keeping an eye on?
Yeah, I mean, it's all the private sector numbers. So we got the ISM manufacturing report. We'll get the ISM services report on Friday as well. That's really the only one. And the ADP number could be a little bit more of a miscue than Q. If you look at the headline number, which is actually showing a contraction in jobs for the first time in a long time, that's certainly weaker. But if you look at the non-seasonally adjusted data, which is what we use as kind of a sanity check for payrolls, that actually came in a little bit better. So net, we still don't know. We're still kind of in a fog of war. But, the market's kind of using what it can get, not necessarily what it wants to get. So we're just kind of scrounging around so far. Keep in mind, the Fed has their own internal data. They do use some of this private sector data to kind of create their own views. But, the gold standard is still the BLS, the BEA, the Census Bureau, and all of those, unfortunately, are shuttered at the moment.